All right. Well, good afternoon, everyone. Thank you for being here for our Stock Investing for Beginners webcast. My name is Scott Thompson, and want to give a shout out to James Boyd, who is working in the chat today. James and I have worked together for a long time, and great to have James there supporting me. If you have some questions, go ahead and fire those away in the chat, and James will be happy to answer them. Also, I'll be referring to a few scripts that we have. Those scripts are already posted in the description, so you can grab those in our class today. But our topic today, you may remember a few weeks ago, we went and looked at some AI stocks that broke out on some huge volume. We placed some trades on those and had some mixed results. But one of the things that's interesting is the way that we got into those trades. We scaled in. We bought half the position on the breakout. It pulled back a little bit. We had a limit order to buy those as it came down into the old resistance area, becoming new support. Looking for those stocks to take off and make new highs and hit some targets. And one of those trades that we had is getting close to a target. So I want to teach you a profit management technique that I found really helpful for me and that traders sometimes will use to kind of balance that difference between where their stop order is and where the target is and how much risk they have as they're working their way toward that target. So I want to show you that, take a look at some new trades today, review some of our other open positions, and get with you. I want to give a shout out to Scott Luck and Will and Jay Richardson and Rojo and Sharon and Eva and everybody else that's here today. Kevin, thanks for being here. And if you haven't followed me and James on x.com, my handle's Scott Thompson CS and James Boyd CS on X. A great place to look there. And let's go ahead and jump into the important information here. Remind everybody that the presentation today is for educational purposes only. The information that we share is for general and educational use. None of the stocks we look at are meant to be recommendations, nor are any of the strategies that we cover today meant to be recommendations. We use the paper money software. That's a little bit different than your real money. There's some differences on how orders fill sometimes. Also, some of the technology, like a dividend being filled, it doesn't reflect that in your paper money. So there's some changes or some differences in paper money, so be aware of those. As always, we talk about stop losses. There's no guarantee that the execution of a stop order will be at or near that stop price. We've done some stock fractional shares in this class. We want to remind everyone that there are some unique risks associated with those fractional shares, so be aware of those risks before you trade. Also, all investing involves risk, including loss of principal, and past performance is no guarantee of future results. So let me go ahead and jump in. The very first thing I wanted to do was to go through that example on one of those AI stocks that we traded last week and talk to you about this profit management technique. And then we'll come back and kind of do a little bit of a summary. But let me go over here to our charts page. I want to go into my single and just review what we did. This was a few weeks ago. Marvell, you can see here, this is one of those three stocks that we traded, the AI stocks that had the huge breakout with some volume. Coincidentally, they met our two green arrow breakout buy signals as well. But the process that we used, if you remember, is we went in and bought half of our position there at the closing price on the breakout day, put a limit order in there. And then we tried to identify an area where we thought the stock would pull back to. We put a limit order to buy those shares there. And with Marvell, the way that worked is we bought our first shares at 98.98. That was that limit order that we placed, and we were looking for the stock to maybe pull back about $4 or $5, get down into the old, support or resistance area as it was getting ready to break out. And so that order filled at 94.98, and then you can see the stocks kind of bounced off of that area and taken off. And so let me show you where we are today. It did go quite low below that breakout point there. So we wish we put a limit order lower to buy those second half of the shares, but it did what we expected it to do. It broke out, tested, deep retest of that old support becoming new resistance, then bounced off of that. And looks like today we closed at about 114.45. So here's the principle that you want to think of. when traders, now our class is really short stock investing for beginners, but you guys ask me all the time, well, how do we get out of something? How do we manage our profits better? Some of those things. And the truth is we do have a profit management system with this set of rules. It's basically, if it closes below the 50-period moving average, we adjust the stop up. And actually, a few weeks ago, we started getting stopped out of some of the stocks that we've been in for months. And so, we did stop out with a profit on some of those, but it feels like it just takes a long time. So I want to teach this technique to you, and it has to do with reward to risk ratios. Now, most short-term traders, when they go in with a trade for a short term, meaning that they'll have a stop and a target in mind, they're going to risk $1 to try to make $2, sometimes $3 on those short-term trades, so that they don't have to be correct or profitable on every trade in order to grow their account. So one of the techniques, as you start getting close to your target area, is I want to ask you some questions. So I want you guys to, throw some answers in the chat here for me today. But we got in the trade here. We set our stop down below the moving average. So I'm going to just move my cursor over. You can see our stop on these 10 shares is at $82. So I need you to remember this, this number. Remember 82. All right. Our target is up here. We looked at some old resistance areas back in time, and we used a target of 126.15 as our target on this breakout that we have. Now, here's question number one. If we closed at 114.45, and let me see if I can find some space here in my scratch pad to write these out. So do you guys remember where the stop was? You guys chat in, someone chat in that stop number so I know that you know that I know. Okay, that was at $82, right? We have our target at 126.15. So, and the closing price today is 114.45. Okay, so here's question number one. And I don't see anybody chatting this in yet, so somebody has to chat this in, or otherwise we're going to stop. There we go. Thanks, Sharon. Okay, Sharon's playing the game with me, so me and Sharon can play. That's fantastic. All right. So the question first is, how much more can we make on this trade? And that means to the target. The stock theoretically could go up forever, but, we're not trading it forever. We're trading it up to 126.15. So how much more money's left in this? So I know it's late in the day. I'm probably going to need my calculator to do this difficult math at this point of the day. So 126.15 minus 114.45. So we can make $11.70, Jay Richardson, right on there. So if I did my math right, $11.70. So $11.70 is how much more we can make on the trade. And that was higher. I mean, obviously went up to 115.66. That's about $9 away from our target, $8 away. Well, I guess it's, about 9. So that's question number one, is $11.70, right? Now, with our stop here at 82, how much are we currently risking? Okay. How much are we currently risking, based on the stop, to get that 11.70? So, in the way we figure that out is we take our 114 where the stock price is and subtract our $82 stop. Okay. So let's do that math. So 114.45 minus 82. And so the answer there is 32, what was it, 45? Yeah, 32.45 there. So and then this is kind of the follow-up question, and this is the principle that I'm trying to teach today. If you don't get anything else out of today's lesson, this is a great takeaway, because one of the most frustrating things when you're a trader, not an investor as much, but still applies to investors as well. But one of the most frustrating things that I ran into when I first started investing was I would have these nicely profitable trades, and then they would turn into losing trades. Drove me crazy. And so this technique really helps with this. And so a couple questions. How much are you willing to risk to get that 1170? All right. Now here's something interesting. And I'm going to give you a couple different answers here. Some people might say that they're willing to risk all of their profit in order to get that $11.70 per share, which is going to be about $117 or so with 10 shares. So some people may be willing to risk all of their profit in order to get that up to the target. And if that's the case, I'm going to just give some answers here. All profit, okay, move stop to break even. Okay, what does that mean? Well, I'll show these in steps for you, okay? So the very first thing I want to do, I'll leave these as two orders because we bought them at two orders, but you could combine this into one order, but I'll show you the two just for fun. Okay, so where did we buy? Well, if we go back to our monitor tab, we can see our average price. If we click on this P&L open, the average price is $96.98. That's kind of just real convenient here. Sometimes you don't get that nice round number, $96.98. So if we move our stop to break even, I could just left click on my order and put it basically at $96.98. Now I'm not going to worry about getting it right there because when I move it, it's going to give me an edit. And so I could put $96.98 on there. And so what questions come to your mind as you set this order up? And I'm going to go ahead and send this off so it'll move the box and we can kind of see it. So confirm and send. It is a stop order. Again, no guarantee we get filled at that price, but it's in our AR stock group. We'll move that up. And now I have an order at $96.98. Well, what's the disclosure we always share with you? What's the problem with a stop order? Well, if it's falling very quickly when it hits that stop, there's a good chance it's going to fill lower than this. So some people might, as they get used to the stocks they trade and they know how volatile each of those stocks are, they might say, you know what, in order to get filled at $96.98, I need to have my stop at $97.12 or $97.20. So, but I'm just illustrating the break-even stop, okay? If you're willing to risk all your profit, but you don't really want to lose any of your original capital, you could put your stop at break even. Okay. Now that one's pretty conservative at this point, right? We're still in this case 96 from 114. We're still risking about, what is that, $18 a share, $19 a share that we're risking on that. So the next place that people start looking at is they would say, well, I'm willing to risk $1 of my current profit in order to get an extra $1 of profit. So let me write that in here. Willing to risk $1 of my current profit in order to let the stock go, in order to capture $1 more profit. So where would we put our stop if that was the case? Well, we could put a hard stop at 1170 below the current close. So let's take a look at that and then we'll move that stop. So we have 114.45 minus that 1170, the room that we have left to go, and that would give us a stop at 102.75. I'm going to put that in here. Stop at 102.75. Again, no guarantee to get filled at that price, but that's the principle, right? So how do we move it? Well, we can just grab that, move it up to 102.75, edit it, put the exact number here, leave it good till canceled, hit confirm and send. It's a stop order. It's in our right group. We hit send order, and that's where the stop is. Now, as you start to do this, one of the things that you'll start to notice is as you're adjusting your stop, you might be hitting other levels of support and resistance. So, in this case, coincidentally, I didn't know this was going to happen, but coincidentally, we have an old resistance at 102.77, and our risk a dollar to make a dollar type of stop is there at 102.75, right? So that's an area people could go. And that's the principle I wanted to teach today is to, as you start approaching your target, is to consider not risking more than a dollar to get that last dollar. Okay, it didn't really make a lot of sense in this trade with a target where we had $32 of risk with our existing stop to try to capture $11.70 of more profit. This one here where we're risking $11.70 to get $11.70, that makes sense. Some people will put their stop even tighter. They'll risk like $1 of their current profit to try to make $2. So they'll try to maintain that 2-to-1 reward to risk ratio. If you're trading a volatile stock like an AI stock or a tech stock or a biopharmaceutical stock, you may find that stop's too tight and it'll just knock you out pretty quickly. And so this 1-to-1 rule typically works pretty well as you're getting close to your target. This stock's had a pretty strong run up, so it wouldn't be surprising to see it pull back a little bit. And that's where this gets a little tricky is, we've had 1, 2, 3, 4, 5, 6 up days. It wouldn't be uncommon at this point to have a 2 to 3 day pullback like we did over here and making another little short-term bull flag as it takes a run at making that target for us. So, even doing this, like when it's making a new high, when it's still $11 away and it looks like there's a pullback, some traders would wait until they get that pullback before they move their stop up. So I just wanted to share that idea with you. And then here's the last little thing I want to talk about on this trade, and then we'll look at some new ones. Okay, is how much how much more can you make on the trade? How much of your current profit are you risking? Or where's my willing there? How much are you willing to risk to get that 1170? Okay. All my profit, this is kind of some of my profit. If the answer to this question, how much of your current profit are you willing to risk, is 0, Scott, I don't want to give back any of my profit. Okay, realistically, the only thing you can do at that point is close the trade. Okay, you're going to have some risk if you leave this on the table or you leave this position open. You're going to have some risk on the trade as it, wiggles around. So if you're really, truly answering, I don't want to risk any more of my profit, then you essentially have to close the position. And this one, the only time that really traders start kind of looking at that is when they're within, maybe dimes and quarters of their target, and they're like, that's good enough. We base the target on support and resistance, which are kind of areas. And so as we start getting close to that, then they might go ahead and close the position. All right. But anyway, so I wanted to go through that with you. I see some good comments in here. Hate those round trips. Be more worried about a gap, gapping down. 1 to 1, 1 to 1.5 reward risk has been beaten into my head by somebody. So, as you look at the different choices that you're faced with in your trades that have targets like this one did, then, consider that rule. It's just a way, if nothing else, if you move your stop to break even, barring a big gap against you, you'll stop running into that scenario that is very frustrating for new investors and new traders, that they have a profitable trade turn into a losing trade. All right. So anyway, that's one of the big takeaways that I wanted you to take away from today. Now let's go back. I want to do just a little bit of a review of what we've done in our class before. And our plan number 1, again, this is stock investing for beginners. Hopefully you have some kids or grandkids that you're sharing this information with. And one of the very first trading plans or investing plans that we decided to do was to invest $5 per day, per calendar day in the market. And what we chose was a ETF that tracks the S&P 500. and the NASDAQ 100. And that $5 per day, calendar day, translates into about $7.24 per trading day. And so I've been doing that with our account. I won't show it here today, but I've been doing that in our account every single day of that the market's open since the 9th of June last year. Okay, and now this one doesn't have any stop order. It's just, we're just investing money. We're trying to create a habit of investing in the market and allowing the market that has grown historically over the last, 100 years from somewhere between 8 and 10% a year. It's done better than that the last 5 years or so, but we're trying to take advantage of that growth in the marketplace. The second plan that we did is we took the top 10 stock holdings in these ETFs that track this market, and we've invested $50 each week using what's called the Schwab stock slices. Again, not a recommendation to use those, but this has just been something that we've been simulating in our paper money account for coming up on about 10 months now, or 8 months, 9 months. And so these are those top 10 holdings. You can see our quantities here is we have 1 share of NVIDIA finally. All these others are just fractional shares. And again, there's some specific risks involved with fractional shares. Be aware of that. Now, this is really cool. Within a few months, and some of you may be experiencing this already, is you'll be able to trade fractional shares on Thinkorswim and on the Schwab account outside of Schwab stock slices. This is a new feature that's coming in the next quarter or two. We don't have an exact date, but very excited about that, of trading fractional shares. And so, basically what happens here is every week on Monday, I go in and I place an order to buy these 10 stocks. And I've just been doing that every week, for several months now. And so, I did that on the 6th. We went in and bought some partial shares, fractional shares of those top 10 holdings, and those are going over here. Now, interestingly, this was negative as of before today. We were actually losing money on this. We were dollar cost averaging those positions, but it was actually net down. All right. Our third plan that we're doing is what we call our stock investing plan, our 2 green arrow plan. And this one's just really simple. We've been doing that on this chart here. We have a 50-period moving average, a MACD histogram, and we're basically just buying when there's 2 green arrows. So like, for example, here on Marvell, we had 2 green arrows back here on a bounce day. That was on the 31st. We had that big green breakout candle here on the day we actually traded it that had 2 green arrows. But the thought here, for those of you that are new, is we're buying stocks that are, have an uptrending green 50-period moving average. We're setting our initial stop 1% below the moving average. And the MACD and the green arrow on the moving average are green until they turn red. All right. And then if we do get some red arrows, then we have a stop adjustment rule. And I wanted to take a look at J&J on that, because J&J is one that gave 2 red arrows yesterday. We've owned this for quite a while. We've moved the stop up a multitude of times, but the stock came down and got a little choppy. But right here, you can see the stock closed below the moving average. That was on the 7th, which was yesterday. And so at the end of the day yesterday, we should have moved our stop up to 3% below the low price that day. And the low price, you can see, was 236.01. So if we grab our calculator, and I am going to adjust this stop, 236.01 times 0.97 is how you get the number of where the stop's going to go. And that's 228.92. So when you get the number, is you want to ask yourself if that stop makes sense. Does it make sense to adjust the stop up? And really what I'm looking for is like these previous lows. Like this previous low here was at 232. So if our stop rule said to put the stop at, say, 233, I might ask myself, well, that doesn't really make sense to put the stop above this last low. That wouldn't even change the trend if I got stopped out there. But 228.92? Let me scoot over here. 228.92 is right here. That seems to be below our last level of support here far enough that, most investors will probably feel comfortable moving that stop up. And so we're just going to grab this, left click, hold it, drag it up there, not going to try to get it right on there because I can, edit it and we'll put the right number in. And again, that number was 228.92. So 228.92. Still a stop, still good till canceled, still not guaranteed to get filled at the 228.92 price. Confirm and send that. And so now we've adjusted our stop based on the rules for our sample plan number 3. And our current positions for that plan are just all right here. Now, these column headers are also scripts that are available in the description. This tells us how many days the stock has been above the moving average. And basically, we could have been in the trade for that long if we'd bought it on the first day. The MACD one here says if it's, how many days it's been green or if it's a red arrow on the MACD. And usually the sell signal is the MACD will turn red and then the moving average will turn red. And that's what I look for. So we don't really have any other stop adjustments to make today. D&D and Cisco had the red arrows a few days ago. And so we did look at those and that stop didn't need to be adjusted. All right. Well, that was the trade review I wanted to do with you. What I want to do now is to go over a little scan that I created. These scans are in the description as well, but I wanted to look for new buy signals for our class today, take a look at some different things. And you can run, you can run some scans. I have some scans in the descriptions that, have a study in there. Those only work on the live side of Thinkorswim. So these columns kind of can help you decide whether there's a buy signal that you want to at least do some additional research. And so one of the things I wanted to do was, we've looked at the sector indices before. Here's the sector indices, and we have that 3-month performance. Energy, utilities, materials, consumer staples are still outperforming over the last 3 months. Energy got hit pretty hard today. But one of the things I was thinking of is if you wanted to be a little bit contrary, and you're thinking, well, there might be some stocks, maybe in consumer discretionary, maybe in financials that were beaten up over a little bit, and they might be starting to go back above their 50-period moving average, is what if we ran a scan in this consumer discretionary area? And so in the paper money, where it doesn't work to have the studies attached to this, I just added these columns in here and ran consumer discretionary and clicked scan. And these are the stocks that came up. And what stood out to me was this. What's that 122 number mean in this column? Well, that means that the moving average on Ross Stores has been green, or that price has been above the moving average for 122 days in a row. The first thing I thought of when I saw that number is I thought, dang it, I wish we bought that 100 days ago, is what I first thought. But I wondered, it's like, well, the MACD looks like it turned green about 5 days ago. So I thought we'd go take a look at Ross Stores and just see if that's a valid entry signal for our trading plan as it is. And so, we have a nice uptrend here on Ross. You can see the MACD turn green back here when the price closed at 219. So we're a little bit late here to the dance. It's up about $5 a share from where it was. There's no guarantee this trend's going to continue, but based on our rule set, the MACD was green. It started to pull back. Looked like it might even give a red arrow if the stock kept going down. But when the MACD changes direction again like it did today, it's almost like a new green arrow on the MACD. And we've made another new short-term high here on Ross. So I thought what we would do is do an example trade on this one today. And just go through the mechanics of using this 2 green arrow trading plan. All right. So here we have the entry price. We're just going to put at the close, which is 224.47. I'm going to shrink down my left side here so we can see. If I put my cursor today, if you go right up here and look below where it says patterns and studies, you can see the moving average, that 1% envelope values at 202.37. And that's where our stop's going to go. So the last thing we have to decide is, well, how much are we going to invest? And for our small kind of paper money account, we've been pretending that we have like a $10,000 account and we're investing up to 5% of that portfolio in each trade. So we're putting about $500 in each of these positions. So with 224-ish being the purchase price, we're going to be able to buy 2 shares. So how would we do that? Well, we're going to go in here, just move your cursor up there close to the closing price, right click, buy custom with stop, and that'll give us an order here. I'm just going to change the numbers to reflect the closing price. So we had 224.47 for that close price there. And then the stop, if I put my cursor up there, I can see 202.37 is where my stop order should go. All right. And then we have just 1 share in here. We're going to bump that up to 2. We're going to lock this link, and then that'll give us the buy and the sell numbers the same. We want to change these. The market's closed right now, so this order is going to go in as a limit order for tomorrow. And generally, I like to make that good till canceled. And then the stop order, of course, is good till canceled. Hit confirm and send, and then just review the order. Buy 2 shares, 224.47. We double check our closing price up here at the top. Looks good. Stop price 202.37. We look over here at our moving average envelope value, and that looks correct. No guarantee to get filled there, and we're pretty close. The buying power effect essentially shows us how much money we're putting in this trade. And we're going to put this in our 2 green arrow group. So we'll send that order off for tomorrow. And so Track It Right was asking, I only see 1 green arrow. And so that's a great question. Let me show you. I saw Eva answered that. She's correct. But let me zoom out a little bit, and I'll show you where that arrow was. So let's go out actually to a 1-year chart. And right back here, do you guys see that? The stock was below the moving average on the 10th of October, 2025. And that generates that red arrow. Let me get rid of my cursor stuff there. There's that red arrow. And then the next day, it actually closed back above the moving average. And so there's that green arrow, Track It Right. This is the green arrow on the moving average. And if we zoom out, it has never gone below the moving average since that time. And so that green arrow is green until it turns red. Now, what has happened a number of times since then, as you can see, actually the same day the MACD went green. So there was a buy signal based on our rule set based there on the 13th of October. We got another buy signal on the 3rd of November, then another one on the 21st of November, then another one. Every single time the green arrow turned green on the MACD, that was a new buy signal. And if you're new to our class, that's also a signal. If we're already in the trade, that's a signal for us to move the stop up again. And so, we'll just manually trail our stop about 1% below the moving average on that type of situation where the stock just keeps trending up. And we've had a few of those. If I go back to the monitor tab, you can see Ross Stores. Let's take a look here. So COP, we're in this trade. It's got a nice little profit on it, but it's been above the moving average for 86 days. So, theoretically, we could move the stop up every time we got a green arrow on that MACD. So it's red right now. And so when it turns green again, if we wanted to, we could adjust our stop up. All right. So that's a great question. Yeah, Scott saying what a nice looking chart there. And so, we're almost out of time today. One of the things I did want to show you that I thought was also kind of interesting is back on the AI stocks. What we looked for a few weeks ago is we looked for a big breakout. I showed the volume. So let me put the volume back on the charts. You can do that by going up here on the main chart settings page, show the volume subgraph. And, usually on a breakout, it's kind of nice to see these big volume spikes or at least increasing volume. So if we go back to MRVL, right, this is the one we talked about earlier today. So that day that we got the day we bought it, yeah. So it wasn't a huge volume spike there, but it did close above that resistance. And then we had huge volume on the sell-off. And then when it recovered, we got a nice little volume spike again. But I wanted to look at BWXT. This is another AI stock that looked like it broke out today. Okay, this had a lot of resistance in that 218.50 area, was really struggling to get above that price. And then if we come in here, number one, we can see that big volume spike here. And this isn't always the case, but the way that traders and investors interpret these large volume spikes is that institutional traders, the big boys with lots of money, they may, okay, not guaranteed, but they may be taking a position in this particular stock. And that's where the way we interpret the volume. It doesn't guarantee obviously that's happening, but big volume spike, big move, gapped up, closed near the high for the day. And so I wanted to use the same technique that we used here that we did with Marvell, is go in with half a position. Now with the AI stocks, we were investing $1,000. So we could probably go in there with about 4 shares total. But what I want to do is to decide a couple of things. Number one is where we want to put that pullback limit order to get in the other half of the shares, and then where we put our stop. Now, track it right. It seems like you may be new. Welcome. Appreciate you taking some time to be here with us today. The rule that we teach says to put the stop 1% below the moving average. But again, the question I think is always important, no matter what rule set you're trading, is do your stops make sense? Well, this is one of those that this has a lot of support. You see all these low prices down in here? Let me draw a line down there at the bottom. There looks like there's a lot of support down in that 190 level. And this just feels really, really uncomfortable in the beginning, but I hate getting stopped out. So what I would rather see someone do rather than put a stop that's too tight, I would rather see someone buy some fewer shares and set a stop down below a support level where the trend will actually change. If this thing drops back down into this 204, 203 area where these moving averages are, where it's been trading sideways for so long, I'm not convinced yet that that's changed my breakout potential uptrend back into a downtrend. It's just gone back into sideways. So, something like this, I might set my stop 1 or 2% below this level of support on those initial stop trades. Then if and when it bounces, then I could start following that 1% below the moving average rule. So that's what I'm going to do here on this example is let's take our calculator again. We have 190.03 times, let's just go 1% below that because it is down there toward the lows of those shadows. 0.99, so 188.12 will be our stop. I'm just going to draw a little line in there about 188.12. So I'm going to right click on that, 188.12. We'll use that for both of these. Oops. So that's where the stop's going to go, is 188.12. We're going to go in with half, 2 shares at the closing price, 231. Where do you think this will pull back to? I've got a line drawn in here about 218. There's a whole bunch of touch points there. I think that's a good resistance area. The high in that resistance area, let's go ahead and draw a set line on that. It looks like the high has been right about there, 222. The low of a gap day, these are all areas that technical traders will look at as potential levels of support. That's at 224. If you can't see the numbers, might go like this. Right click on it and put it on the left side. So now we have 218, 229, 224. Where do you want to set that limit order to buy this thing? If it pulls back, what are you guys thinking? The last time we did this, we wished we would have put it a little bit lower than we did because it had that big pullback day. So, chat those in. What I'm going to do, I think, is I'm going to put my limit order at 218.50, just right onto that lower line that I've got. Now, here's the caveat, though. Because I am looking to buy the bounce off support, if that thing bounces before hitting 218.50, then I need to be willing to adjust my entry price to 224, 223, whatever it is. Okay? Yes, Eva, my crystal ball's in the shop, but the old rule of thumb, right? We expect old resistance to become new support. And again, doesn't predict the future, right? No, nothing does that. But if it comes back in this area, I could see traders maybe driving the price down in that 218.50 level before someone gets real excited about buying it. But the caveat's important. You know, if that thing comes back, let me draw some little rectangles here. You know, we might get a little, just a small range candle tomorrow. And then the next day it pulls back a little bit and then pulls back a little bit more. And what I'm really hoping for is that we get like this long little shadow. Let me change drawing tools. You know, what I'm really hoping for, Eva, is I like to see it kind of do something like that where it pulls back and hits the 218.50, then rallies back up at the end of the day. And then the next day is it just takes off. You know, does a nice big green candle thing like Marvell did. That's what I'd like to see. Okay, so I'm going to put my limit order for 2 shares at 218.50 with the same stop as before, and that stop again's at 188.12. So let's put this order on, then we'll finish up. All right, so we're going to go right click. We're going to buy custom with stop. Okay, and we're not going to put a target on this one for today, but you could calculate your own target on this one. So 231.78 for the first 2 shares. And then we'll put a stop at 188.12. Make both of those good till canceled. And then 2 shares. And there's probably another way to do this on Thinkorswim, but last week we did it in just a couple of orders. I'm going to do the same here. So we're going to do confirm and send on this one. And this will be our AI stock. Send that off. So we have a limit order in there. Then we're going to put another limit order there at 218.50. Buy custom with stop. 218.50. Our stop's going to be at 188.12 on these 2 shares if they fill. No guarantee that they'll get filled, right? 2 shares there. Hit confirm and send. And so, you know, we're expecting the stock to pull back. If it does, it'll fill our order at 218.50 or lower. It'll activate this stop order at 188.12, and it could just keep going down and knock us out of the trade even lower than 188.12, right? But that's the game we're playing right here today. All right, so we have 2 orders, one to get in limit order at the close. We're expecting the stock to pull back a little bit, hopefully pick it up near the old resistance level. We're going to keep an eye on it. If it comes down here and then doesn't hit 218.50 and then bounces, we got to be willing to buy the other 2 shares, you know, on that bounce that might be higher. So we'll come revisit this over the next week or 2 and see what happens. All right. Well, hopefully that's helpful for you today, everybody. If you are new to our class and you haven't gone through our 8 lessons, we have on our home page for YouTube. So let me chat this in here for you. In our home page for YouTube, if you scroll down a little bit, you'll see right here, Stock Investing Basics, and we have our 8 lessons. You know, so if you're new, go through these 8 lessons and we lay a foundation for what we've been doing the last few weeks, which is implementing the rules that I taught here in lesson number 4. And that's that 2 green arrow plan. We've expounded on that a little bit. We've added some rules like we did today about profit management. Hopefully that's helpful for you. We placed a few new example trades today, not recommendations. But, you know, again, thank you for being here today. Have a great week, and we'll see you next time. Thanks, everybody.